Good morning. So we've had quite a lot of testing undergoing on the QDB bot 2.0. If you're not aware about 2.0, what it is, it's using volume delta. So it looks at the volume changes, the retail volumes. So here's a great example of them getting absolutely destroyed. They'd gone long Kiwi Swiss and they shorted Aussie USD. Look at that. And likewise, they'd gone long dollar Swiss and they shorted the Euro USD. So we know that the volume delta is going to be incredibly powerful, and so that's the basis, that's the logic behind it. Now, what's happening on this bit of the this graphic is that this is the randomness aspect of the testing that's now going to be eliminated. Now, the fact that these random tests were poor performance proves that we need to be using a standard logic of using sentiment and the volume delta. So the Monte Carlos effectively open a buy or sell randomly. It doesn't look at the sentiment, it just picks buy or sell, and then we allow the stop loss to get us out when we're wrong, and then the trade should run. Okay, so that's these two taken care of. We can probably eliminate the random tests now, and that's great because it proves that we're on the right footing, and it proves that the sentiment is the way to go. I mean, if we only have to look at that, and then we can see they're getting absolutely destroyed today, and we're basically milking that. We are exploiting their positions, and we're trading, and we're reversing those guys. And we can see we've made a huge profit, right? Which is great to see. So it does prove that the sentiment is the way to go. And unfortunately for these guys, they're getting absolutely bullied really badly. So it's going to be a case of eliminating these two, and then we're going to probably eliminate one because I think we probably have to have checks, and it'll be a case of having test machine 2 or test machine 5, and it'll have to be a decision which one we want to do, and it will be a case of just comparing the profit and loss. 5 is weekly and daily. 2, well, actually machine 1 to 4 is just daily only. So this is just daily only. Okay, so we'll have to wait and see how we go. 1.0 bot encountered lots of difficulties, and we can counter that because we're not interested in just one currency pair on 2.0. Because we're basically with 1.0, this particular old bot, we were only interested in one pair. So if we are going to get chewed up on one pair, we're going to get chewed up. However, on 2.0, we're hedging and we're also diversifying, and we're not trading one pair. We're trading like various pairs. And so if that one goes bad, say, and that one goes okay, it's going to offset those losses. But if they all perform well, that's fantastic. But they won't all perform poorly because we've got a high hit rate. It's unlikely they're going to get rewarded and they're going to get paid on 4 pairs as opposed to getting paid on 1 pair. It's very, very unlikely they're going to get paid across all. And so we're basically hedging that risk because sometimes the crowd do get paid, but with the old bot, if they're going to get paid on something, we're going to be a bit screwed because we put all our eggs in one basket, and if they get paid and we reverse them, we're going to get punished. So 2.0 is going to be better for that. It's going to counter the eggs in one basket thing, and we can see we just went sideways. We pretty much went sideways. Yeah, for a long time, and so we basically got chopped up like crazy. And so 1.0 has had losses. We were up 1900. We've taken quite a bit of a cut, and it's been a bit bad for morale. But it's just a case of something that's going sideways. It doesn't know what to do. How would you put your stop loss? Where would you put it? If we're going to go sideways, if we're going to range, it's no good. But if we're going to trend, the bot's really good, and we made a heap of profit on that move. But when we did this, it started really taking lots of losses. So 2.0 is going to be better than 1.0, and it'll be a case of just deciding which one of the two we're going to go for. and whether or not we're going to have the weekly and daily. And we just identified that the random tests were bad, and that's fine because that just proves we're on the right track, aren't we? And that's it. So I think that's it for our report. I will need to do one last test, and we're going to put in a thing called the profit lock. And so for trade runs, it's just simply going to say, well, we're not going to allow it to go to the stop loss. We're just going to ensure a little bit of profit. And if it rides to the SL, if it rides to the TP, that's fine. But once it moves, which it should, because of this, we're going to capture profit. And that's the profit lock test. And so we're definitely on the right track. And if you come to this sheet and you think, well, this is a lot of information, this will all be gone. This will go because this will be old. Once we've identified what the 2.0 logic is going to be, whether or not it's going to be weekly or daily, and then this will all go and it will look a bit tidier, because at the moment it's a little bit of a mess, this tab. But basically we just, this is a place to put some charts and things. So in a summary, the random tests were bad, therefore proving that the sentiment is the way to go. And lastly, the profit lock is going to be the last test that we're going to do, and then we can compare the results. And I think what I might do is do one last video here, and then we can probably look to perhaps deploy 2.0 around about here for testing purposes only, because you wouldn't want to go live yet because we're still early days, but it's made some really good returns. Quite happy with that, to be honest. Last week 133. Admittedly the last 2 weeks wasn't that great. The last 2 weeks on test machine 5, £258 in 2 weeks, which is really good. And that's, remember, 5 is using daily and weekly, and 2 is just using daily only. Well, 1 to 4 is using daily. And so we'll have to wait and see what happens. And it looks like we're going to kick these out, which is great. And that's great for confidence. And it looks like we'll probably kick this one out as well because it doesn't have checks. And that's just a quick one on the 2.0. And hopefully you understand why we probably don't want to trade one pair, because if they're going to get paid, we're going to get screwed. And so obviously if we diversify, it's going to be unlikely we're going to get screwed on 4 as opposed to 1. Hopefully that makes sense. Any questions, let me know, and I'll speak to you guys soon.